Hey, VA Nation, National VA Loans and Stride Bank here. And today we want to talk to you a little bit about your greatest financial tool. All right, let's get after it. Hey guys, it's Jeff Newton here with National VA Loans, powered by Stride Bank. And want to thank you guys all for coming in. Like we said, we are going to talk about your greatest financial tool and what that is. And for those of you that are dedicated listeners out there, I'm sure you've heard me say how using your home is your greatest financial tool. Your greatest financial tool is your home. It's usually the thing that number one has the most value to it, but it's also the thing that typically continues increasing in value. So let's get right into it. We've got a nice little slideshow in here that we're going to go through. So let's do that. Let's open this up. There we go. I'm going to remove that. All right, perfect. Okay, so when I say using your home is your greatest financial tool, I mean unlocking your home's equity with a cash out refinance. And that's one way to do it. That's one way to use your home as a great financial tool. So many of you are probably asking, okay, well, what's a cash out refinance and how does it work? All right, that's a great question. So what is a cash out refinance? Cash out refinance allows you to replace your current mortgage with a new one for a higher amount, receiving the difference in cash. Of course, it's a great option for homeowners that are trying to, like it says, leverage the equity they've built in their home. So let's talk about that. And let's talk about equity. In the last 4 or 5 years, there's been lots and lots of homes bought in the United States. And over that same time period, we've seen interest rates be low. We've seen them go up. But what we've definitely seen over that time is we've constantly seen the home equity or the home values increase. I'm sure you look around, even if you bought your house back in 2020 or 2021, 2022, somewhere in there, I'm sure you've been paying attention a little bit to the market, and you've seen that, my goodness, the house I bought for 300 is now worth 360 or 380, or it just sold again for 400. Equity has been on a rise. Now, do I think equity is going to be at a tear like it has been over the last couple of years? Probably not. But consistently, we see throughout the United States, we see about a 4 to 5% increase in equity year over year. So, I mean, you got to think about it. Okay, well, what part of my portfolio or my is making me that kind of return, and what kind of return on investment I see in other areas? Because the return on investment on a home is fantastic. So, and it's pretty, like I said, it's pretty consistent. All right. So let's kind of get into some reasons to consider a cash out refinance on your home. Lower interest rates, and just so you know, they are going lower. They are actually, we're seeing them reduce and go down as we speak, compared to credit cards or personal loans. And this is a no brainer, but yeah, credit cards typically, I mean, don't get me wrong, a lot of them, and if you're like me, you'll move a balance to to another card with the zero that offers 0% on transfers and things like that. But that 0% runs out, and eventually you're hit with that. Instead of a nice 5, 6, 7% interest rate, you're at 19.9 or 24.9. And now you've racked up 10, 12, $15,000 of what you thought was 0% credit, but now you're going to be getting hit with all of that interest. So it's definitely a great option to use some of it for that, because you do have lower rates. Flexibility to use cash for your financial goals. Again, this is what we're talking about. Right now, there's so many different investments, and that's not what I do. But I did sleep at a Holiday Inn last night. So no kidding. But I dabble in the market myself, and I have money in different investments. But there's a lot of secure investments out there, like 6-month, 12-month CDs right now, that you can put some of your equity into. That's going to earn you upwards of 5, 6% year over year. So not only are you going to be earning equity or building equity in your property year over year of about a 4% clip, you're also could take that money and put it into the market or into something secure like a CD and earn that interest year over year as well. So you're putting that money that's in your savings account, which is your home, and you're putting it to work for you. Tax benefits. Again, I am not at all a tax attorney. I don't pretend to even play one on TV. So definitely consult your tax attorneys. We will give you a closing of any kind of loan. We'll give you a closing disclosure. So you'll have that with you, and you can take that right to your tax attorney at the end of the year and go through everything there. Real quick, just in case anyone has any questions and would like to call, it's 855-956-4040. Feel free to give us a call, 855-956-4040. Any of our VA specialists will be happy to help you in any way they can. All right, let's get back to it. Okay, so Next, let's look at some scenarios. I tried to put in quite a few scenarios just from loans that we've done over the last 3 or 4 months that would give you an idea of how you can use this. I'm not going to read all this, but home improvement funding, being able to use your own home's equity to build more equity in your home is always a great use for it. So if you can take 50, like in this scenario, $50,000 in equity out, do some of the upgrades that you want to do to your home, whether it be kitchen, bathroom, paint, flooring, things of that nature. Do those upgrades, you're going to see an increased equity and increased value in your property, whether when you go to sell or just at any time you wanted to pull equity out, you're going to see that increased equity. So home improvement is a really big one, and I believe that it's probably one of the best reasons to use your home equity is to improve what you have. Let's go here. So next we've got debt consolidation. Now, when I say that home improvement is one of your best reasons, debt consolidation is probably your best reason. I don't know if you're like me, but I know that a lot of people that I work with, and a lot of veterans I work with, a lot of customers, clients, things like that, and just myself in general, the most important thing to me is what's coming out of my pocket at the end of every month. And the way I can tell if I have savings is, do I have more at the end of a month versus less? So in this scenario, I've done some consolidations that would make your head spin that are just amazing and life altering. But in this scenario, we had a borrower that had about $30,000 in credit card debt. Guys, look, $30,000 in credit card debt may not sound like a lot, but when you pay that and you can only afford to potentially pay the minimum payment, you could be paying that credit card debt for 15, 20 years. I mean, there is no one I know that wants to pay for a pair of shoes or a shopping trip that they took 20 years ago. They don't want to still be paying it. So getting rid of this credit card debt by consolidating using your home's equity is always a good idea. Car loans are another one. Car prices, I'm sure you've seen it, have done nothing but go up, up, up. And I don't see them coming down, although I won't say that. I have seen used car prices come down just a little bit, which is great for all of us out there. But on a traditional level, over the last 5 years, we've seen car prices do nothing but go up. Unfortunately, over the last couple of years, we've seen nothing but interest rates go up on those car loans. So seeing an average car payment of $750 or $800 is really not something out of the norm for us. We see that quite a little bit. And I always think, gosh, dang it, that used to be 2 car payments or 3 car payments, but now it's just one, because not only because of the interest rates, but because of the price of the automobiles. So keep in mind that you can do this. This is a way that you can consolidate this. You can pay that loan off. You could have that car drive free for 5, 6, 7, 10 years. That is one nice thing. Even though prices have gone up, the cars are lasting quite a little bit longer and a lot more miles. So that is one definite good part of it. But you can see how you could save yourself quite a little bit of money there. Savings over $300. And in this scenario, they drop down from a 30-year to a 15-year fixed. So there are options there. Now, is a 15-year fixed right for everyone? I would say no. In fact, it's not right for me personally. But for some, it is the right way to go. And it's something we can always explore for you. Okay, college tuition. Now, this is one that's a little bit, we've done this a couple of different times. Of course, this scenario right here. And then I've done it a few other times, help finance college tuition. I've got different opinions on this. And of course, my opinion really doesn't matter in this subject. But what does matter is your situation as a whole. So one thing that we like to do at National VA and Stride Bank is we like to not only just look at what you're looking to do, but let's look 5, 6, 10 years down the road and see where we're going to be if we do that. And that's, I think, only fair for us to do, because we have all the information that we need. And as long as you're telling us what your goals are, then we can help meet those goals, whether it be paying college tuition, paying off debt, or just setting a little nest egg aside. And speaking of nest egg, real estate investment is a great nest egg. We've had couples, and I promote this a lot with veterans. If as far as a veteran goes on cash out loans, when you guys decide to cash out and tap your equity, you can tap out up to 100%. Now, we don't suggest that in all situations. Sometimes it makes perfectly good sense to do it. Sometimes it doesn't. Again, it's all situation based. But the minimum or the minimum you can go is 90%. You can go up to 90% cash out without any effect. So you leave 10% equity in there. Now, I like this scenario where a borrower is thinking, okay, I'm going to pull the cash out and I've got this nice little $125,000 investment over there. I want to put 25% down and I need about 50 grand to fix it up. Well, there's nothing wrong with that. It's okay to use your own money in this scenario because you're still going to be building equity on your current home side. And now you're going to have a rental property where you're going to see positive cash flow and someone else is paying your mortgage. There's a bunch of different ways to do this, but we are very good at helping you figure it out. And the nice thing is we can not only do the VA loan, but we can also do the conventional purchase for the home or for the investment property you're looking to buy. So we're kind of a one-stop shop when it comes to that here at National VA and Stride Bank. Uh, Emergency fund. This is always a good one and something that people don't think about. So I view, a lot of times you can view your house as a savings account primarily because that's really what it is. I mean, you're building equity in it. You're paying a balance down, so you're paying principal down, so your cost of the loan is going lower while the value is going higher. Well, that's what we want to see in our savings account, right? We want to see the value of our savings account grow and grow and grow. Well, in this scenario, you do see that your house is an emergency is a savings account that you can actually tap and then put into an account that you have for an emergency fund. A good rule of thumb is 6 months of total monthly expenses, and then I like to have a little bit of an emergency money. I like this $25,000 number, and the reason I do is I can remember 15, 20 years ago when I first, started, being an adult basically. And I thought, man, everything I do costs me 300 or 400 or $500. Well, now that number, you got to tack a zero onto it. Everything I do now, it seems like it costs me 3,000 or 4,000 or $5,000. So having not only your monthly fallback plan or your plan to, you've got 6 months of reserve set up, your monthly reserve set, but also having a little bit of peace of mind and knowing that you have an emergency fund is always a good thing to do. And again, you have the funds there. You may as well put them into to where it's easy for you to access and get a hold of. Okay. And then this is the big question that I think everyone needs to ask is a cash out refinance right for me? And there's a couple things here. Do you have significant home equity? I think a lot of people do have significant home equity now. And if you don't have significant home equity, what is significant? So I think it's something that needs to be reviewed. I think if you haven't reviewed what the value of your property's worth and things like that, it's probably a good time to do it. Are you comfortable increasing your mortgage balance? Because you will increase your mortgage balance. But again, if you're increasing your mortgage balance to increase the value of your property, to pay off debt and save yourself money on a monthly basis and money coming out of your pocket, to cover unexpected expenses, things like that, then it makes sense because it is your money. It is your savings that you're tapping. Do you have financial goals? Again, the same thing. Debt relief, home improvements, major purchases, things like that. It's great for that. There's no reason really not to do it in a situation like that, as long as we are leaving remaining equity in there. Then do you plan on staying in your home? This is one of the factors when we say we want to know all that's going on is, do you have intentions in staying in your home? Because if you do have the intention of staying in your home, then we can kind of gauge out, okay, well, how does this make sense? And where's your break even? Where's your recoup number? At what point does this make sense or does it not make sense? And that's really what we're here for, is to make the decision of, okay, does this make sense? Is it the best way for me to do it? Can I save myself money on a monthly basis? And if I can I then put that money back into my mortgage and pay it off sooner? We have a lot of people that do that. And that's one of the options that we didn't really discuss on there because it gets a little bit complicated. But when you take a look at a borrower or at a loan and you look and you say, okay, we're going to be able to save this individual or this veteran $700 a month. Okay, that's awesome. But the veteran's super excited, of course, the customer is, and which I don't blame him. I would be as well. So, but what if we could take half of that $700 a month and you save $350 a month and you apply the other half back towards your mortgage and you pay it off 10 years sooner? Let me assure you, it changes your effective rate of the mortgage completely. It changes the amount of interest you pay completely, and it makes an entire. It's the beauty of it is all you're using is the savings you already have. It's an interesting way to do it, and I assure you that if we get the opportunity to show you, you'll like what we have to see, or what you have to see on this, because it is a way to not only save money but pay your home off sooner and become even more debt free. So again, if you have any questions, give us a call here at 855-956-4040. Of course, you can check us out online at nationalvaloans.com. Guys, if you're like me and you're a little proactive and you kind of just like getting stuff done, then I would suggest going over to nationalapplynow.com. That's the best way to get in and do the full application. One of our VA specialists will reach out to you immediately. You'll know exactly what's going on. They'll walk you through the program. Heck, they'll even share screens so you can see what's going on this end, which makes it a lot easier. I will be honest, I really like that, because it does make it easier even for me when I'm working with somebody. So it's a pretty great process. But again, if you like getting stuff done, go to nationalapplynow.com and fill out that application. It's a secure link. Or if you have any questions or want to just talk a little bit before we get into your scenario, then give us a call at 855-956-4040. Any of our VA specialists would love to talk to you about the VA cash out refinance, and they're always ready to do it. Until next time, folks, thank you for everything you've done for our country. Thank you for your service, and God bless.